Yes, a very good morning to all of you. Right, so we are discussing the 7B part of the chapter, right? 7A was regarding the 700 series in which we studied 700, 701, 705, 706, right? So these were the three audit reports, four audit report standards. And then after that, the two information, 710 and the 720, which was the comparative information and the other information. And now we've come to the discussion of the 7B part of the chapter, right? In which we want to discuss the duties of the company auditor under section 143.1, right? Under section 143. And in that, the first one is the section 143 subsection 1, which is duty as to inquiry, 6 points of inquiry. Then 143 subsection 3, which is duty as to reporting, wherein we have the 10 points of the reporting. Then 143.11, to report on the matters which have been specified by the central government, right? So under which the central government has issued the CARO 2020. Then section 145, duty of the auditor to sign the audit report or any document which is required to be authenticated by the auditor of the company. Then section 143 subsection 4, duty to give the reasons for the qualifications or the adverse remark in the audit report, right? So auditor, you have to give the reasons if you make any modification to your opinion. Then duty as to the branch audit, okay, who can do the audit of a branch of a company in India and outside India. Right, then 143 subsection 9 and 10, which is regarding the duty to comply with the standards on auditing. Right, so auditor, you need to do the audit as per the standards on auditing issued by the ICAI. And the last duty which we discussed over there was section 143 subsection 12, which is regarding the duty to report the fraud to CG, right? That is reporting of the fraud to the central government. Okay. And then after that, we came to the discussion of the CARO 2020, in which we started our discussion regarding the applicability of the CARO 2020, right? So what does the applicability say? Is it possible that for few companies, CARO may not be applicable? Yes, it is possible, because what do we say? That CARO shall apply to every company, including a foreign company, except, right, private limited company subject to certain conditions, then one person company, small company, section 8 company, insurance company, banking company, right? To these 5 companies, that is one person, section 8, small company, one person, and the, yes, what do you say, the insurance company and the banking company, to these companies CARO is never applicable. And private limited company, not being a holding or a subsidiary of a public company, having paid up share capital and reserves and surplus not exceeding 1 crore, right, as at the end of the financial year. Total borrowings from bank financial institutions not exceeding 1 crore at any point of time during the financial year, and total revenue as disclosed in schedule 3, including the revenue from discontinuing operations not exceeding the 10 crore during the financial year. So for a private limited company, for CARO not to be applicable, all the 3 conditions have to be cumulatively satisfied. Any one of the limit exceeded and CARO becomes applicable, right? And then after that, we saw a few questions, like some 7-8 questions regarding the applicability of the CARO. Right? So first, when you are asked a question on the applicability, the opening remark which you'll write in your answer, okay, CARO 2020 is an additional reporting requirement which has been issued by the central government in consultation with the ICAI under section 143.11 of the Companies Act 2013. And then after that, we had made a heart over there, right, that you need to learn it by heart and also do the writing practice. We had written a W over there, right? The applicability of the CARO, that CARO shall apply to every company, including a foreign company, except, right? Then what do we say? Okay, what is included in paid up share capital, reserves and surplus? What is not included? Then borrowings means what all, and revenue. And then in the given case, and therefore the company is exceeding the limit, right, for the exemption of CARO, and therefore CARO is applicable to the company, or the company is not exceeding the limit for the exemption, and that is why CARO is not applicable to the A private limited, B private limited, and so. Right, so that was one set of questions which could be there in your exams regarding the Caro applicability. Okay, right. So if they say a company is involved in promoting the sports of hockey in the country, right? So that's a non-profit organization. So registered under Section 8 of the Companies Act. And they say that this company is not maintaining the proper records of the PPE. Do you need to do the reporting under clause 1A? No, right? Because it's a Section 8 company. So Caro only, not applicable. So there is no question of doing any reporting. Okay, and then after that we came to the discussion on the 21 clauses of the Caro 2020. How many of you have learned, or can you recite all the 21 clauses of the Caro? Anyone? Would you like to tell the story, or would you like to say that clause 1 is PPE, intangible assets, clause 2 is inventory working capital? Right? Any volunteer? Right? Any student in the class who would like to make a humble attempt to, recall the 21 clauses of the Caro? Right? Switching on your audio, I'll hand over the mic to you. Will you try? Yes? Anyone? What will happen? Maximum you'll, go wrong somewhere. And anyways, I'm sitting over here to prompt you if at any place you go wrong. Right, so anyone, will you tell me? Yes, Sandhya, will you tell us the 21 clauses of the Caro? Yes, will any of the student tell me the clauses of the Caro? Right, do you remember the story? Yes, Mr. Reddy, will you tell me? My God, absolute silence they'll maintain. Okay, right. So anyways, what does it say? That please inform the landlord and the landlady. Right, what do I inform them about? What do I inform them about? My deposits, records, dues, undisclosed income, repayments and issue proceeds. These 6 things. Right, so that is my clause 1 to 10. Right, clause 1, property, plant, equipment, intangible assets. Clause 2, inventory working capital. Clause 3, clause 4, LIGS, loans, investments, guarantees and security. Right, then clause 5, public deposits. Clause 6, cost records. Clause 7, statutory dues. Clause 8, undisclosed income. Clause 9, repayments. And clause 10 is the issue proceeds. Okay, then we said why to inform all this to landlord and landlady? Because we said a fraud was done by Nidhi, who is a related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Right? So clause 11, fraud. Clause 12, Nidhi company. Clause 13, related parties. Clause 14, internal audit system. Clause 15, non-cash transactions. Clause 16, registration with the RBI and the NBFCs. Then there is 3 bad news for the company. What is the bad news? Company has incurred the cash losses. Then there is the resignation of the statutory auditors, and there is the material uncertainty regarding the ability to meet the liabilities. Right, so that is clause 17, cash losses. Clause 18, resignation of the statutory auditors. And then clause 19, which is regarding the material uncertainties regarding the ability to meet the liabilities. And then we have the 2 points of C, right? What is that? CSR and CFS, right? So CSR, clause 20, that is your corporate social responsibility. And then CFS, that is clause 21, which is regarding the consolidated financial statements. Okay, right? So these were the 21 clauses. And then we saw, okay, under which of the clauses do we have the sub clauses for the reporting? Like under clause 1, we have the small a, capital B, then B, C, D, E, right? Clause 2, inventory A and B. Right, clause 3, which is regarding LIGS, we had the small a, capital B, B, C, D, E, F. Right, then clause 4, direct. Clause 5, direct. Clause 6, direct. That means there are no sub clauses over there. Then clause 7, statutory dues A and B. 8, direct. 9, A, B, C, D, E, F. Right, then 10 is A and B. 11, fraud A, B, C. 12, Nidhi company ABC. 13, direct. 14, AB. Right, 15, direct. 16, ABCD. 17, direct. 18, direct. 19, direct. 20, 2, A and B. And 21 is again direct. account, right? So likewise, if we take the total of all these subclauses put together, we saw that there are some 47 points of reporting under the CARO. And then yesterday we completed up to clause 6 of the CARO 2020, right? So what was clause 1? It is the property, plant, equipment, intangible assets. So whether the company is maintaining the, not able to hear you, whether the company is maintaining the proper record showing the full particulars, including the quantitative details and the situation of the PPE. Then whether the company is maintaining the proper record showing the full particulars of the intangible assets. Then whether the property, plant, equipment has been physically verified by the management at reasonable intervals, and any material discrepancies noticed on such physical verification, have they been properly carried, is dealt with in the books of accounts. Then 1C, whether the title deeds of the immovable properties, are they held in the name of the company? If other than those where the company is the lessee and the lease agreements have been duly executed in favor of the lessee, are they held in the name of the company? If not, provide the details thereof. Right, the description of the property, the gross carrying value, then in the name of the promoter director, for what period, and also reason why it is not in the name of the company. Then where any revaluation has been done during the year of the PPE or the including the right of use assets or the intangible assets or both, whether the revaluation has been done by a registered uncle, what we say, registered valuer, then the amount of the change, and if the change is of 10% or more for each class of the property, plant, equipment or the intangible asset on the net carrying value basis, right? And then we had the clause 1(5). What was that? Whether any proceedings have been initiated or are pending against the company for holding any Benami property under the Prohibition of Benami Transaction Act, whether the details have been disclosed in the financial statements. Okay, right? So that was clause 1. Then what did we say? That for each clause of CARO, we first need to see what is the reporting requirement. Okay, what does the clause say? Then in order to report on this, what are the audit procedures which are required to be performed by the auditor? The verification, the checking, and then after that the reporting which is required to be done. Right, so when you're writing the answers of CARO, you write down the clause, then you write down the verification, the audit procedures, then you write down in the given case, and then the conclusion, okay, whether reporting is required under CARO or no reporting is required under the CARO. Right, then we came to the clause 2, which is regarding the inventory working capital. Inventory is similar to clause 1. Inventory is similar to clause 1B. What is that? Whether inventories have been physically verified by the management at reasonable intervals, and yes, whether the procedures followed for such verification, are they appropriate? The coverage and procedures for such verification, are they appropriate? And discrepancies of 10% or more, whether they have been properly dealt with in the books of account, right? So little bit of the change over there, right? That it says here you have to comment whether procedures followed for physical verification, are they appropriate? And they don't say material discrepancies, they say discrepancies of 10% or more, right? In each class of inventory, whether it has been properly dealt with in the books of account. Okay, and then the 2B, which is very important, right? Whether at any point of time during the year, the company has been sanctioned working capital limit in excess of 5 crore on the basis of security of the current assets from any bank or financial institution, then whether the quarterly returns or statements which are submitted to the bank, financial institutions, are they in agreement with the books of account? Right? Are they in agreement with the books of account, right? So if you've taken a credit facility of more than 5 crore and quarterly return statements are to be submitted to the bank, whether they are in agreement with the books of account, right? So that is the clause 2B, right? Then we came to clause 3. right, wherein it says whether any LIGS, loans, investments, guarantee securities, have been given to company, firms, LLPs, or any other parties. Then what does it say? 3A, right, the loans, guarantee, security, the aggregate amount and the amount outstanding of such loan, guarantee, security given to subsidiary, associate, joint venture, and then loan, guarantee, security, the aggregate amount and the amount outstanding to other than subsidiary, associate, and the joint venture. Right, then we have the B, whether loans, investments, guarantees, securities, whether the terms are they prejudicial to the company's interest, right? So are they not in the interest of the company, right? So are they prejudicial? So you have to report whether they are harmful to the interest of the company, right? Then 3C, whether the repayment schedule for the loans and the advances in the nature of loans, whether it has been stipulated and whether the receipts are regular. Right, so repayment schedule has been stipulated and whether the receipts are regular. Then we have the 3D. What does it say? If it is overdue, then state the amount which is overdue for more than 90 days, exactly. And then whether reasonable steps have been taken for the recovery of the principal and the interest, right? So that is the 3D. Then 3E, whether any loans or advances in the nature of loans have been renewed or have been extended, or any fresh loans have been granted to settle the overdue of the existing loans. Then what does it say? The amount of such loans which have been renewed, extended, or fresh loan, and the percentage to the total loans, right? And then we have the 3F, whether any loans or advances in the nature of the loan given during the year without specifying the terms of the repayment, or which are ROD. What is ROD? Which are repayable on demand. Again, what does it say? The aggregate amount, then the percentage to the total loans, and the amount of such loans which have been given to the promoters and the related parties, right? The amount of such loans given to promoters and related parties, right? So that was your clause 3, which is regarding the details of the loans, investments, guarantees, and security. Right? Clause 4 is also loans, investments, guarantees, securities. But now what does it say? Whether these loans, investments, guarantees, securities, are they in compliance with the provisions of? Yes, you have to check whether these LIGS, intercorporate loans and investments, are they in compliance with the provisions of section 185 and 186 of the Companies Act 2013, right? So 185, it is regarding the loans to directors, and 186, it is regarding the intercorporate loans and investments, right? So you need to check the compliance. Like, one requirement over there is that it should not be more, the investment should not be through more than 2 layers of investment company. Then the rate of interest should not be lower than the 1 year, 3 year, 5 year, 10 year government security closest to the tenor of the loan. Right? Then also, what do we say? There should be no term loan taken from any public financial institution which should be subsisting. There should be no default in the repayment of the deposits. Right? So all these were like the conditions. If it is exceeding 100% or 60%, then it says the special resolution is required in the general meeting. Also, the board approval is required. Right? So all this. So for this, we need to know the section 185 and 186. And then as an auditor, we need to check the compliance with these sections, and then report in our CARO that yes, LIGS are in compliance with section 185 and 186 of the Companies Act 2013. Okay, right. Then after that, we have the clause 5, which is regarding the public deposits. What does it say for public deposits? That whether the company has accepted any deposits or amounts which are deemed to be deposit. You don't call it a deposit, but it's nothing but a deposit. Then what does it say? Whether it has complied with. What has it complied with? Right? Whether it has complied with the RBI directives, section 73 to section 76, and any other relevant provisions of the Companies Act and the rules framed there under. And if not complied, they've not complied with the RBI directives, company law rules, then it says state the nature of the contravention. And if any order has been passed by NCLT, CLB, RBI, court, tribunal, at least whether that order has been complied with or not. Right? So that is the clause 5, which is regarding the public deposits. Then we came to clause 6, which is regarding the cost records, right? What did we say? If maintenance of cost records has been prescribed by the central government under section 148(1), whether such cost records have been M&M. You remember M&M? Whether such cost records have been made and maintained. Right? We do not conduct a detailed examination. We only do a general review of the cost records, and we say prima facie the cost records have been made and maintained. The clause does not require you to comment about the cost audit. It only requires you to comment about the cost records. Right? So whether the cost records have been made and maintained. Okay. Right? So this is still where we have reached in our Caro journey. Right? This is the station up to which we have reached. That is the clause 6. Then I told you clause 7, twinkle, twinkle, little star. Super important question over there. Right? Which is regarding the statutory dues. Right?